It's an historic milestone for the Bitcoin community. This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin. Little b for the currency and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price, XBX index right now shooting past $63,000, $63,464 to be precise. Bitcoin is up about 3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So Bitcoin's price spiking to a 6-month high past $63,000 as the much anticipated ProShares Bitcoin Futures Exchange Traded Fund made its trading debut on the New York Stock Exchange. Bitcoin climbing 33% over the past month on expectations the U.S. Securities and Exchange Commission would approve an ETF tied to Bitcoin futures contracts. And that leads us to our chart of the day. Just right there, you see ProShares ringing in the New York Stock Exchange at the opening bell. Let's take a look at our chart of the day.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, there you have it. The ProShares Bitcoin Strategy ETF charting the first Bitcoin futures ETF in the United States. The stock ticker is BITO on the New York Stock Exchange, and trading volumes on the first day appear strong, with at least 1.5 million shares of the ETF changing hands in the first couple hours, or more than $620 million worth. ETF Trends CIO Dave Natick saying the first 30 minutes of BITO was pretty textbook. Demand spiked, pushed pricing up over fair market value for a short burst. One big block traded and snapped it in line, and now we're pretty much stable. While the 10 largest ETF launches witnessed inflows of $14 billion in their first year on average, Tom Lee, head of research at market strategy and research firm FS Insight, estimating demand for ProShares' Bitcoin futures ETF is likely to exceed $50 billion in the first year, and those inflows will drive Bitcoin's price to hit $168,000. Bless that Bitcoin bull's soul. Tom Lee joining us now to discuss is Simeon Hyman, global investment strategist at ProShares. Hello there, Simeon. What an exciting day. And I suppose maybe you could put it into perspective for us, the significance of this moment to the crypto community and the trials and tribulations of getting a Bitcoin ETF approved by the SEC.
Sure. We're really excited. We're excited to bring the first Bitcoin linked ETF to market. This is a milestone in the ETF industry, just like the first bond ETF, the first gold ETF. So this is big news in ETF land, and of course, it's a real milestone of maturation and evolution of cryptocurrency and Bitcoin. We look forward to providing this opportunity to investors who haven't necessarily had the sort of wherewithal or gumption to be involved with wallets and exchanges and keys. So this is going to make it much easier for folks to incorporate into their regular brokerage account. And the trading that it will bring to the ecosystem should add a lot of additional liquidity to Bitcoin trading, and that's always a good thing.
Simeon, I just wonder, why is ProShares the first? Was it just good timing, a matter of developing special relationships with the SEC, a prior history, a track record?
We're always focused on innovation at ProShares, and I'm not privy to discussions with the SEC per se, but certainly we made our first filing for a Bitcoin ETF back in 2017. Innovation and R&D is part of our DNA, so this was certainly a natural outgrowth of what's core to us in terms of bringing out differentiated, innovative, and when we can, first to market ETFs.
All right. Well, you have first mover advantage, which certainly, at least in Canada, has proved to be an advantage for the first mover out there. But Invesco was also set to have approval, perhaps, but they've dropped efforts to launch a Bitcoin futures ETF. Valkyrie is aiming to trade on Wednesday. Do you think you could sustain your first mover advantage, or what differentiates ProShares from the competition?
Well, we certainly think that not only are we first, but that we've brought a robust solution. This combination of the regulated futures market and the ETF instrument is a real belt and suspenders combination that isn't just convenient, but also effective and robust. And that's a solution that we think will be of value to investors for quite some time. If we're kind of a proof point on this, we actually launched the analogous mutual fund, ticker BTCFX, back in July. And the mutual fund, it's just been out 3 months, but in that time period through last Friday, the Bitcoin reference rate, that's the rate that amalgamates several exchange prices, had been up 51%. And the mutual fund using the similar future strategy was up 52%. For comparison, GBTC, the Grayscale Trust, was up 37%. So we're happy to be first, but we also think we've done it right. And we think our track record of delivering innovative solutions and just the short look at how the mutual fund has delivered on on its intended outcome, we think bodes well for its prospects.
Okay, so I see you have a track record with the mutual funds. Why was the SEC receptive to Bitcoin futures as an ETF versus, say, a physical Bitcoin ETF? Have you filed for a physical Bitcoin ETF? Is that something on the horizon? And again, if you could tell me, why is the SEC more receptive to a Bitcoin futures ETF first?
Yeah, I mean, the SEC has been public, so you don't have to wonder what they're saying to us, because the SEC has been quite public in advocating for the benefits of futures-based exposure to Bitcoin. It is that regulated environment. The fact that the CFTC is there, there's a clearinghouse, it's going to settle, much harder to manipulate prices. That's been a real consistent message from the SEC, and of course, it's consistent with what we see as the benefits of a future-based strategy. So they've been very public about it, and we certainly see the same benefits.
But aren't Bitcoin futures ETFs, if linked to Bitcoin, are exposed to the same market forces that could be up for market manipulation?
So two separate pieces. The manipulation piece is quite well regulated in the futures market, but indeed the ETF is designed to properly represent the behavior of Bitcoin in all its sort of, play it as it lies natural state. In other words, there's if it's going to perform in a volatile manner, then that indeed is how the ETF will perform. But what I would suggest is that volatility in and of itself is perhaps a feature, not a bug, because that's where you get the diversification elements. Now that this can go into a regular brokerage account, investors can incorporate it into their asset allocations, and it's harder and harder to find anything that doesn't sort of behave the same way every day. And that means that in its appropriate, modest allocation, doing something different than stocks and bonds, it can really be a beneficial portion of a portfolio. But that volatility will speak through the ETF.
Right. So it's more regulated, but investors are certainly paying a premium for that. Let me bring up this tweet from Charlie Morris, the founder of data firm ByteTree, tweeting Bitcoin futures ETFs launch today. Roll yield has spiked to 17%, which means investors underperform BTC by 17% on an annualized basis. Is there concern over that premium?
If we put a little more context around this, because it's a certainly an exciting day given our launch, and that means some interesting things are happening just because of the additional volume from the launch. But if you look at the month of September as a snapshot, the average premium of the next month out contract to the near month contract, so that's the thing that you would roll to, was 20 basis points a day, and that would annualize to a 2.5% annualized roll cost. And so, look, we don't know what the future will hold, but one other thing that's also important to note is indeed that the more participants are in the market, the more liquidity is there, the more there are arbitrageurs looking to short, say, the ETF. That's very likely to bring down those kinds of costs over time. And we certainly put forth that, a 2.5% annualized roll cost, that compares I would suggest reasonably favorable with any other way that you might want to access Bitcoin. Remember, you can't even invest in that Bitcoin reference rate. You can't just invest in the thing in the corner of the screen. There are multiple exchanges, so there's some costs in all ways. But we do think that if you look at that month of September as an example, the costs are quite modest and indeed compare favorably to other ways that people will get exposure.
All right. And Simeon, I'm just curious, do you personally own Bitcoin or one whole Bitcoin? Have you been a follower of Bitcoin for a while?
I've been a follower for a while, so I have to keep my personal investments close to the vest for the purposes of public disclosure.
Do you follow the philosophy, or is that something that you are intrigued by, or at all? Is that a reason why you were interested in Bitcoin?
So that's a great question, and I think to frame it for everybody who's listening to this conversation, and thank you for the opportunity. There are two parts going on here. There is the investment piece, and then there are the underlying use cases. And as an investor, imagine you were investing in gold. You were putting gold in your portfolio. You wouldn't have to really necessarily know, whether you wanted to make jewelry with it or whether you were some sort of metallurgist or had an industrial application. So as an investor, you don't necessarily have to be completely attuned to its use in DeFi or the anonymity of the transactional process or exactly, how many coins a miner is getting. So there is the ability to invest without having to completely roll up your sleeves. That said, it is absolutely true that those underlying use cases are part of the long-term value proposition. And to be non-technical about it, it is pretty cool. I mean, this is cutting-edge 21st century stuff that it will in all likelihood have a really permanently changed the investing and the financial landscape. And so that is certainly a compelling thing to keep an eye on. But you know what? You don't have to quite keep an eye on that piece every day to have it be an important part of your portfolio.
So would you say it's still better to own some Bitcoin rather than a Bitcoin futures ETF?
Well, as I said, the futures, in fact, we think are, if anything, a better place for price discovery. The regulatory aspect and the ETF wrapper make it a very compelling alternative. Certainly, there are going to be plenty of folks who will invest in Bitcoin directly. And, if they were investing in Bitcoin directly yesterday, I'm not sure they're going to be the first people to invest in the ETF, but there are a ton of people who were waiting for this opportunity, both buy and hold investors and the trading community. Both of those constituencies are really important. If you're going to buy Bitcoin and you're going to hold it for 3, 6, 9, 12, 24 months, you're still going to buy it one day, and you want those traders there to make sure that it's trading efficiently. And you're going to sell it one day, and you want those traders there to make it trade efficiently. So both of those communities, we think, will find important use cases for the ETF, making it a robust alternative that
Simeon,
we think will
just one last question before we close it out. I want to know, what's looking ahead? Is a ETH futures ETF next, another altcoin futures ETF, or perhaps a Bitcoin spot?
Yeah, we're not going to, sit back on and rest on laurels here. Innovation is critical to us. We are watching the maturation and evolution of the Bitcoin market, the cryptocurrency market, always looking to see what opportunities may be there in other currencies and the evolution of the regulatory environment. So when other opportunities do avail themselves, we will always be looking to bring new solutions and important, valuable solutions to investors.
Well, congratulations, Simeon. You are the first. ProShares did a great job. Looking forward to seeing the future developments of this ETF. That was ProShares Global Investment Strategist Simeon Hyman. Taking a look at our top stories again. Grayscale Investments, the world's largest digital currency asset manager, has filed with the SEC to convert its Grayscale Bitcoin Trust into a Bitcoin spot ETF. And tweeting out this video, GBTC first launched in 2013 and has become the largest Bitcoin investment vehicle in the world, with assets under management of close to $40 billion. It holds roughly 3.4% of all Bitcoin in circulation, according to Grayscale, the CoinDesk sister company. Meanwhile, Valkyrie Bitcoin Strategy ETF is aiming to make its trading debut on the NASDAQ Wednesday and become the second Bitcoin futures ETF to trade in the United States under the ticket BTFD. A strategic choice, considering it's also shorthand call to arms, if you will, for buy the effing dip in the Bitcoin world. Valkyrie CEO Leo Wald will be on CoinDesk's First Mover at 9 a.m. tomorrow. And joining us now to discuss is Anthony Saccaro, founder of LA-based financial planning firm Providence Financial and Insurance Services. Hello there, Anthony. So, off the bat, is a Bitcoin futures ETF something you would recommend to your clients?
Well, I generally deal with a client base that's a little more conservative, a little bit older. So I'm going to say certainly not for a large majority of their portfolio. We tend to focus on income, and you're not going to get income from a futures-based ETF or from Bitcoin at all. But it's been touted as the world or virtual gold, and I believe in that. I think if someone wants to have 2 or 3 or 4, maybe maximum of 5% for potential growth, I would have no problem recommending it at all. They're going to have to do it outside of us, though, just because there's too much risk. As an RIA, we've got too much compliance issues with that. But an ETF actually opens up that possibility where now you can do it in a manner that is more in line with what most traditional investors tend to believe about their portfolios. They won't go buy Bitcoin, but they're familiar with ETFs. And if you can put a BTF and a Bitcoin in an ETF like they've just done today, I think a lot of clients will be open to that. So I'm not necessarily going to offer it, but I'm not opposed to it for these clients.
Are you recommending your clients exposure to Bitcoin at all? And if so, how?
Yeah, so if they want to take a little bit of money and gamble with it, and with all the volatility that we've seen, we can't say that it's not gambling. Whenever you're talking about, record high of $63,000, and just a few months ago, it was a third of that value, or at least half of that value, actually. The reality is that if they're going to do it, they got to do it through a traditional app, through Coinbase or one of the Gemini or one of the other apps out there. It's not something I'm going to help them with because my clients are generally in the more conservative of nature. But that's how I'd recommend they do it. And I'm personally going to stick with the coins as opposed to the futures for now, for sure.
All right. So what is your outlook on Bitcoin in the short term, long term? Is now a good time to buy, or is it too frothy?
Yeah, I think there's going to be another pullback. You can't believe that Bitcoin is going to go straight up. As we saw, it was back in, I think it was April of last year, April of this year, as a matter of fact, 6-8 months ago, that it was at these levels. Now it dropped back to half that value. I think it got under $30,000. Now it's back up. It's not just going to go straight up. I'm adding to my holdings. I think that there is going to be some more pullback. There could be another 30 to 50% cut, but ultimately long term, $300,000, $400,000, $500,000 a coin, and possibly even beyond that. So absolutely a good long-term investment, but whatever you put there, you got to not lose sleep at night, not worry about it, and pretend like you don't need the money.
Tempering those bullish sentiments out there. Thank you so much, Anthony Saccaro, for joining us. That was Anthony Saccaro of Providence Financial and Insurance Services. And that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.